the one thing about gold is that you want to, buy low, sell high. You've heard that before, right? As an investor, the goal is to buy low and sell high. Easier said than done. Well, not really. So what do I mean by that? Now, a lot of people think what I mean by this is that you're trying to time the market, right? You're going to tell me when the top is, and I'll sell at the top and I'll buy at the bottom. No, look, nobody can time the markets. I'm not saying that. Nobody can. If they could, they'd be the richest guy in history of the world. They can't. But what we can do is we buy when things are cheap and we sell when things are expensive, okay? We can do that, and we know when they're cheap based off like historical reference points. We can use tools like technical analysis to help us see that. Now, just because it's cheap doesn't mean it can't get cheaper? No. Just because it's cheap doesn't mean it can't stay cheap for a long time? No. But the best that we can do is to buy when things are cheap. So let's take a look at gold from a historical lens perspective for a little bit. This is the gold to the S&P 500 ratio. Remember, everything's a trade. So here we are pricing the S&P 500 in gold. And what we can see is that we are right here, 2020. Here is 1900. This is 120 years. We are at a historical low. We haven't been that low since 2000. We are at a historical low of gold price right now. So even though it's at about, roughly $2,000 an ounce, kind of back to the high we were in 2000, the S&P has gotten so expensive when we price it in that, we're at an all-time low. Now you can see every time it's hit that level, look how fast or look how high it's gone back up. And so we know that it's historically cheap. If we look at it from a couple other metrics, we can see, for example, gold price. Here's the S&P 500 to commodities. So it's not just a rotation into gold, it's a rotation into commodities. I've been talking about this for over a year. Bretton Woods 3, countries would rather have the commodities in the ground. That's other minerals, metals, oils, energies, etc. And what we can see, this is a chart going back to 1900 as well, 120 years, and we can see commodities are also at all-time lows. When they get here, they go up. So again, could it get lower? I mean, it could. Could it stay low for a while? It could. But what we do know is it's very, very low. And so we want to buy low, we want to sell high. Here's another chart showing the cycles of commodities. And what you can see, again, this is the S&P to the commodity cycle. And you can see right here we are, again, at a historic low, another buying opportunity. If we look at it from a technical analysis perspective, so I'm sure most of you guys know if you've been watching my videos for any time, I only put a little bit of credibility into the technical analysis, a little bit like reading tea leaves, but it is important to take a look at it. And what we can see, this bear flag is forming in the gold price right here. It looks like it's about ready to break out. If we get a breakout, which in this type of a pattern, I think you typically get about a 75% chance of a breakout, it'll typically move up the length of this movement, so it could easily push gold 2,500, 2,800 or higher if that happens. So again, this doesn't mean it's the bottom, but it's historically low.